Most traders will scroll past the Charles Schwab Corporation today. The overnight scan didn't. It flagged long. Stick around. The full trade plan drops at the end. Quick ask before the evidence. If these daily breakdowns help, subscribe, like, and share. It keeps them coming. Structure today. Patterns first, indicators second, institutional read third. And the trade plan closes it out. Let's start with the chart. Here's the daily chart. 60 bars of context. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $117. Red is our SL at $110. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up two chart patterns on the daily. Double bottom, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Real quick, daily scans, posted results, zero cost. Join in, then let's dig into the pattern. Pattern number 1. This is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. 87.31. Measured move target, $97.26. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 14.4%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole, pulplo 6.0%, then tight consolidation, bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 0.6%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Levels time. These lines are where buyers and sellers have fought it out before. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of +0.68. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 50, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Here's the layer most channels skip. Patterns and indicators are the surface. Underneath is where institutions leave footprints. Let's read them. ICT and smart money concepts. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bearish zone between $100.01 and $102.79. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $111.86 and $112.51. Price tends to revisit these imbalances. Most importantly, we just had a choch bullish move at $99.99, a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened and those prices act like magnets. The point of control, the most traded price, is at $92.38. The value area runs from $87.57 on the low side to $97.20 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 113.65 is above value area high, $97.20. Trading above VAH indicates bullish strength. POC at 92.38 is key magnet support. Order flow time. Net pressure from the last stretch of candles, buyers versus sellers. Over the recent window, buying pressure accounts for 64% of volume versus 36% selling. The overall flow signal is bullish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 74, signal neutral. Williams %R is at 10, bearish. Chaikin Money Flow reads 20, bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 21% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Quick zoom out, the bigger market picture. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR %. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. By the way, the trade levels land in about a minute. If this is useful, join now so tomorrow's scan finds you. Before the trade, the part that separates traders from gamblers, risk. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max, and that decides the share count, not your gut feel. Get this right and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. All right, you've seen the evidence. Here's the trade. Bias is long. We'd look to enter near $113. Take profit sits at $117. Stop loss at $110. That puts us at 1.34 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 1.34. Horizon is roughly 5D. That's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. The full levels are in the description. Grab them before the bell and subscribe for the next scan. So zoom out for a second. What we just walked through on SCHW, that's a long bias setup projecting roughly 3.6% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Comment your watch list ticker and it might be tomorrow's video. Trade safe. See you in the morning. See you in the... Tomorrow's ticker is unknown, even to me, until the scan runs at dawn. That's the fun of it. Subscribe, bell on, and you'll see it the moment it drops. See you tomorrow.